and its name is Marco.
Welcome back, everybody, to Hoot Loot. After a month-long hiatus, this is a Markonomics 101 and Hoot Entertainment production. This is going to be an amazing show. This is September 18th, 2022. We've been off the air for about a month. We're back in the fact zone right here, but we are looking at something back there that we don't like. We're going to tell you all about it today. The show today is going to be called The Imminent Financial Tsunami, like this thing back here. No one knows it's coming. Well, few people know it's coming finally, but it's really about to hit. It's imminent. You've got to take action. You've got to be aware of it. Your life is going to change quite a bit. So, you know, we've been doing regular updates on some of the social media, including Instagram, TikTok, Getter, Facebook, and a few others that will come to mind. But you know, we're always out there. And so keep watching, because right now we're going to tell you stuff today that's going to be so important that you need to pay attention. And I know there's been a lot of doubt about what we've said in prior shows, but just look at the track record. We've been right on the whole way. Okay, we were the first to tell you EVs were a hoax, and guess what? You've had another power outage in your area. You're starting to figure that out. So anyway, with that, I want to say please like and subscribe, spread the word. This is a very important day. We're declaring it Professional Politicians Suck Day. Okay, we'll see you right in a minute. Welcome back, everybody. Now I want to show you the first chart of what is going to be a bunch of really bad stuff. And that's why we're calling it a financial tsunami, because it is going to be big. And that's what we think. It's also going to be the part of the bear market coming up, which will be the most brutal, and people will lose the most amount of money. That's how it works. It's not even close to over yet. We're going to show you why it's not close to over, among other things, and there's a huge exposure. So this first graph is the 2-year rate, Treasury rate minus the 10-year rate. That, when it goes negative, is called a yield curve inversion. It typically precedes recessions. As you can see on this chart here that the Federal Reserve has put together, every time that it goes negative, it precedes a recession. Sometimes by a reasonable amount of time, sometimes not. This time we're already in one, and the inversion is going worse and worse and worse. It's getting worse. So we're not even close to turning this thing around, and this is going to just start us off with what's going to be some really horrible news, but we'll tell you how to deal with it. All right, so now we're going to look at what we call the canaries in the coal mine. These are the leading indicators of really capital and where it's going, and that tends to lead the market very, very often. So the first one, of course, is the password formerly known as Bitcoin. Now, it's now coming close to breaking the $18,000 support line. It's gone down 10% just this weekend alone when nothing else is trading. You know, cryptos often have that problem. Over the weekend, they trade 365 days a year, 24/7, and even on Christmas Eve. So sometimes you can have a big seller, no buyers around, and unfortunately with the password formerly known as Bitcoin, it looks like it's breaking down through support here, and that tends to say that stupid money is getting killed again, and they are the leading indicators right now of the market. And, you know, if you doubt the fact that this is a password only, I dare anybody to show me a real Bitcoin. What you'll show me is a password for Bitcoin, for your wallet for Bitcoin. It is a password, therefore a password only. And Michael Newtown Saylor owns MicroStrategies owns 130,000 of these. Hasn't even figured out it's a password yet. Oh my God! All right, so now another one is good old Kathy Knock on Wood's ARK Innovations. It's in a bear flag. It's not doing too good. The stupid stocks are definitely starting to break down. And this is the portfolio of stupid stocks, if there ever was one. A stupid stock being an overvalued, overhyped, what some people call a meme stock, to be polite. But it's not a meme stock. It's a stupid stock, all right? So let's go on MicroStrategy. Speaking of stupid stocks, this could be the potential the stupid stock of the year. The guy that ran this company, who is now a former CEO, but now chairman, Michael Newtown Saylor, has he's turned a very successful company into a Bitcoin holding company, continues to borrow money, buy it lower, continues to buy. even now, he's announced plans for a $500 million stock offering to dilute the shareholders so they can buy more Bitcoin. Now, this company has about $2 billion outstanding in debt that's coming due. Wouldn't it make more sense to be a little more prudent to buy in that debt at a discount? Yes, it would, but no, he won't, because he loves his Bitcoin over his passwords. All right, now, Tesla Motors, I've always got a lot to say about Elon the Felon. I will not say that. That's coming up, believe me, in a future show. But this remains what I would think, or I would call, the most overvalued stock remaining in the stock market. This has the most value enough to potentially lose. And when you think about now what EVs are going through, that even though you have idiots like Governor Newsom, basically banning gas-powered cars in California, which is the height of arrogance right then and there. It's just the height of arrogance, because he can't figure out that EVs are not green. They're not in any way economical. They don't help. The lithium is terrible to refine. The battery disposal is a nightmare. They put an incredible burden on the electrical grid, as do the idiot Bitcoin miners who use electricity yet generate no GDP. Okay, good stuff. We talked about this like 6 months ago, and we told you this was coming down the pipe. He has got the most market share to lose. He's got all these jams with Twitter, and now he's buying a British soccer company, anything so he can get out of his own stock is what I think's going on. But in any event, here's Tesla Motors, another canary in the coal mine. I would say it's probably breaking down here. This one can easily trade under $100, and it happens to be one of ARK's largest holdings, I may add, too. All right, so now this one is not normally a company, FedEx, that we would put in the canaries in the coal mine, but man, did they shock the world on Thursday, Friday, by reporting a huge shortfall in earnings, revenues, closing offices, laying off employees, and basically labeling what we've already known to be true, that there's a global recession. We've been talking about this for months. We said a depression was imminent last December, and we're right on the cusp of one. So, right now the market just woke up and said, hello, and all of a sudden, kaboom, it's going to go down just like Wile E. Coyote, moments after realizing that there's nothing underneath this feet. All right, so now we're going to go on to the indices right here. And, one of the things that's been really odd is the Dow Jones Industrial Average having stayed really high like this, even though there's slaughter everywhere. Why is the case? Why is that happening? Well, I'm going to show you, but I don't think it's going to happen for too much longer. The major cap indices are all due to start taking the brunt of this bear market. And as a matter of fact, that's what's going to make it so tough, is that it's not going to be limited to stupid stocks anymore. It's going to be across the board, all right? Across the board. That means you can have the best run company in the world. It's still going to be worth less. Still going to be worth less, because as long as interest rates go up, the discount mechanism makes every asset worth less. We're going to show you interest rates are going up, even though inflation is going down. We're about to enter what we talked about before, a hyperinflationary depression. Yes, we are. And you know why? Because every single problem we have, every single one of them has the same source. Professional politicians screwing up the economy, messing everything up, simply because they want to be reelected. We don't work for them. They work for us. Fire them! Vote on all the incumbents and make America laugh again. That is the only way to get this country back on track. I'm sorry to be saying this, but we've got to fire them all. If you hired one of them and they did that bad of a job, would you ever want to rehire them again? The answer is no. Especially because they have no ethics. They're all a bunch of lying sacks. And you know what? Anyway, Dow Jones Industrial Average, we're going to show you a little bit more about that in a minute. NASDAQ 100, huge. Now, this is one of the significant things about the week, is that it was an outside week. That means that the high was above the previous week's high, the low below the previous week's low, but it started out with a higher high, ended up with a lower low, just like a slingshot, and that tells us that this bear market's about to enter full gear. Now, the NASDAQ 100 being, again, we've talked about this going down to 9,500, 9,000, very likely for it to happen on this wave, if not lower. Okay, now the S&P 2, outside week, held up very well, large cap stocks. Again, same kind of thing. smaller caps and stupid stocks and cryptos and all that just, oh God, that roadkill. That stuff's gotten the crap kicked out of it. These guys have held up pretty well. They're not going to. That's the thing. Even if you think you're safe, you're not. I'm in cash 100%, and I'm still not safe because the damage, the collateral damage from what's about to happen is going to hit everybody. I don't care who the hell you are. I don't care how insulated you are. It's going to hit you. We're going to show you that, and that's unfortunately going to be a part of the last part of this year. This last part of this year is going to be really bad, I believe, okay? All right, so now the small caps, same kind of thing, outside weak, bearish, transportation. Here's the news. FedEx gets creamed for 20%, global recession, global recession, global recession. Even the awoke woke up. And now I've got UPS also getting hammered, and a bunch of other transportation companies getting hammered. What does that mean? It means the consumer is tapped out. And the consumer is what we count on in this particular economy to just spend and spend and spend, which is why we end up giving stimulus after stimulus after stimulus after stimulus. Though I never get one! What do you think of that? I don't like it one bit. All right. Now then. The CRB Commodities Index, this is a major in a basket of commodities. It broke down from a bear flag. There is commodity pressure. Now, this is interesting because you don't see the impact on the official indices for many months. So you can see commodities going down, the CPI going up, simply because of the way it's measured. Now, when you start looking at commodities right now, they're all starting to break down, whether it's food, whether it's energy. Unbelievable as it may seem, energy, gas is down 50% in a couple months. All right? Gasoline is down. It may not seem like it's down as much because some governors, like Governor Newsom of California, had to raise taxes in the middle of it. Oh, gosh, thank you, Governor Newsom. You are so thoughtful. And then he wants to give a stimulus check so that he covers the cost of the higher gas prices. Oh, God, how does he come up with that? Seriously, tell me somebody. Okay. The Goldman Sachs Commodity Index also looking like it's breaking down. Now, here's a real solid evidence that we have falling inflation expectations. These are short-term Treasury inflation protected securities. Look at that. They've broken out of a rounded top. That's not good. These trade up when the expectations of inflation trade up. Same with these guys. These are the tips. These are the longer-term ones. These are broken down too. That says two things. One, inflation will come down, but at what cost? The economy's going off a cliff at that cost. FedEx has already said it. You're seeing it all around. I'm saying it right now. We are in for a tsunami, like the kind that was behind me before, that I want to run the hell out of the way of, but I don't know. We'll see if I can. Okay, the Invesco Agriculture Fund. Here's a good basket of foods, and again, looks like a bearish wedge. I would think very much the odds are very high this is going to break down. We're going to have, for the most part, lower food prices. Corn also bearish ascending wedge. Soybeans, same thing, and sugar. Just like a young girl should. That one is kind of in a sort of a neutral pattern, but everything is breaking down. Everything. So, you want to give the odds to the downside right now. We're in a primary bear market in everything. In everything. Okay, wheat, wheat's been just pummeled, even though we're supposed to have no wheat at all anywhere. Every port was closed. There was no supply of wheat. We were going to have to grow our own bread and stuff like that. No, not quite yet. There is some wheat around, obviously, because the price of it is at about a 52-week low. So it has to be. Base metals are like, copper, aluminum, that kind of thing. Very important in construction. Base metals fund starting to curl down. This is one of the most important companies. It's the largest copper company. Freeport Copper used to be called. This is curling over too, and this is the other thing. The green farce, as it should be known, the green farce, the whole eco thing, the California Governor Newsom again, 41 new bills, for eco-friendly stuff. First of all, there's enough copper around to even make it happen at all. That's number one. And the largest producers of copper will tell that to you. They've told that several times. There just isn't enough copper around for this farce to go on, and it doesn't do anybody any good. They realize it. Why don't you, Gavin, Governor Bruce Newsom? All right, cotton also, breaking down again. This is the kind of thing we expect from almost everything right now. You see pattern after pattern, just like it. Lumber, breaking down. Crude oil, believe it or not, in a downtrend. Right now, OPEC is actually cutting production of crude oil while we're selling it out of strategic petroleum reserves. We right now have the lowest level since 1984, and that makes our military readiness quite disadvantaged. I don't really like that. That's sort of an impeachable offense to me, but who knows? I'm not really there. All I know is it signals to our enemies, hey, by the way, we're disarming unilaterally. We're not going to have any oil, so might as well come on in and take us over. That's pretty much what it says. All right. Gasoline, here's another one, down 50%, as I said earlier. Why are we depleting our strategic petroleum reserves in the middle of this? Gasoline prices are not a problem. The reason they're a problem is because the taxes are so high.
Yes! Yes!
California's mostly taxed. So, of course, it's going to stay high. It's going to always stay high, even when the price goes down like this. Okay, now this is a telling chart, too. If you don't think we are in for a hell of a crisis, look at this. This is 2008, 2009. Look how far gasoline fell precipitously in a few months, and look at what's happening right now on the right side of the chart. That's scary. I don't know what you think, but that's scary. That kind of thing, like kind of Halloweenish scary. Okay, well, it wasn't that scary, but Okay, natural gas. This is really weird. Okay, first of all, Europe, their natural gas is costing them something like $500 per barrel of oil equivalent. Something like that. Now, they've also cut off supplies from Russia, from Gazprom, which is like 40%. Yeah, gas prices are they're in a head and shoulders, round the top. I don't know, but, we can liquefy it. It's not easily transportable. And unfortunately, our pipelines have not been approved that we should have had approved. So, I don't quite understand this other than the fact that this is another sign that the economy is that weak. Okay, really, really weak. Because right now, all these things are coming down because of what's called demand destruction. Okay? That means that you find substitutes. You wear a sweater instead of turning on your heat, something like that. All right, big oil looked really good for a while. It was starting to look really good, and it's kind of gone in a sideways pattern. So we'll have to see here, but I think this too may break down. We'll see. Probably almost everything will be swept by this current, and that's the point. Oil services, these are the drillers. They're not drilling. Maybe they don't think that the recovery in oil prices is permanent or going to last. Right now, I would say not. These are really blue chip companies. They're not really putting the drilling rigs out there. And let's face it, the Biden administration is just screaming at them about not doing enough drilling. Well, hello, you want to put windfall profits taxes on us? Why would we want to do that, sir? Oh. All right. This is the GLD, or the gold ETF, another bad sign, okay? Gold is going down. Gold should not be going down in this kind of inflationary environment, even though inflation expectations are going down. There's a lot of embedded inflation in this market. So this is not a good sign. This also tells me depression 2.0, and you can dial back a few episodes for that when we started talking about it. Or you can dial back all the way to December of 2021, where we said, is a depression imminent? Well, I think we were right on that one. Silver, also, high-yield silver, not away. This is another one that's performing really badly and does not speak well of the economy. All right, the Gold Bugs Index is the junior gold and silver miners. They're not doing well either. Another sign, yick. Apple, now let's go to some of the mega cap companies here. Apple had a huge, massive outside reversal last week. This is the largest cap-weighted company there is. This thing goes down, it drags down the major indexes with it. That's the important thing. Almost all of these mega cap companies like Amazon, big, massive outside week down. All of them are in sync. They're joining together. This thing is going to be a unified movement down. Same thing with Alphabet, except it broke out. Broke down out of a fair flag. Meta Platforms, I want to make just a few comments about my good friend Skidmark. First of all, he's been giving away private information to the FBI. That's number one. So all of your little messages on Messenger, they are not privileged like you may think. I don't know if you thought that anyway, but some of you seem to think WhatsApp is so privileged. It really isn't. He gives it away to the FBI anyway. So, take that as it were. The other thing that was kind of interesting is that these virtual headsets that he's faked the future of his company on give you a headache in an hour. Okay, you put one on, you start getting a headache. I used to own the Nintendo 3D video game set. Yes, I was one of those people, one of those nerds that owned them. That gave you a headache after an hour. Have you heard of it being around anymore? No, and no. Not good news for Skidmark himself. And also, finally, last but not least, he has been, let's just say, under investigation for manipulating the elections with his Zuckerbucks, his sort of covert way of funneling campaign contributions unknown to Democratic or liberal candidates of his choosing. Because as we know, Mr. Zuckerberg is not exactly what I would call play it down the line kind of guy. He's sort of a, over here, please, and if you don't agree with me, I censor you. Okay. Microsoft also looking like it's going to break down. These are the kind of companies that have a lot of pull that are going to drag the averages down. All right, NVIDIA too. Semiconductors are looking really bad. This was everybody's favorite. Well, they're in crypto and they're in gaming. So, they're kind of overdue, kind of struck out on that. But, still a good company, still like their chips, but it's really under a lot of pressure. All right, the 3-month Treasury bill is, if you look at it, it's on like a parabolic move up. This is from the Fed, that is, raising rates. It is now above 3%. The Fed meets this week. There's talk of 75 basis points, 100 basis points. Who knows what they're going to do to show that they're inflation fighters? We'll see. Right now there's starting to be a little bit of a buildup of sentiment that maybe should ease off a little bit. But on the other hand, they have a long way to go, believe me. With inflation running, according to the CPI, more like 9. According to logic, like 15 or 16. They have a little ways to go. Okay, the 1-year Treasury bill is the highest rate along the whole yield spectrum. It's actually at 4%. Now, if you think about that, most of our Treasury debt is financed with short-term Treasuries, 1 year, 2 year, 3 month, et cetera, et cetera. A lot of T-bills that are floating. Right now, our average cost is 1.33% or something like that. You start averaging 4%, that's 3 times the amount. You get 3 times more in debt service, $1.2 trillion a year. That's more than Social Security, more than Medicare, or pretty close. And let's just put it this way. It's a budget buster. I don't know exactly how they're going to be able to pull that one off. The Fed has painted itself into a corner. Long live the Fed. The Fed is dead, or whatever we want to say about it. But I don't think they have a whole lot of firepower left here. All right, the 5-year bills, those are going up too. They broke out. Now, this is important. The 30-year, those have been making new highs. And what's important to understand, rates go up, all risk assets go down, okay? Rates go up, stocks go down, bonds go down, cryptos go down, everything goes down, all right? So as long as we're having higher rates along the spectrum, and we are, do not look for the market to be turning around here. As a matter of fact, it's going to continue to pressure it all the way. That's the biggest problem here. You're fighting the Fed. You shouldn't fight the Fed. You got to kind of let it go. And to be honest with you, I've endorsed cash. I still do. This is a market where there will be some opportunities, but you have to have liquidity. You have to have cash, because when things hit that level that they're worth buying, you don't have any cash, and you've ridden down the down escalator with everybody else. Too bad. You're still just as broke as everybody else. If you're in cash, things have gone down in price, you're in good shape, because people will pay to get liquid when they're scared enough, and that's going to happen at some point. Okay, the U.S. dollar index going parabolic. Now, this one has been a shocker to me, simply because of all the printing that we've been doing. The real reason for this is actually fairly obvious. Europe is a basket case even worse than we are. You think if there's going to be a tsunami here, you have no idea what it's going to be like over there. Germany, for example, has a 40% or so PPI and a 1.7% 10-year. Talk about being behind. Jeez, what are they going to do? I don't know. But the thing is, they're worse than we are. Believe it or not. Some countries are mismanaged even worse. I would still vote out their incumbents and make them laugh again, too. I think that's a good strategy for any country that has elections. Vote out all the incumbents. Never allow re-election. Don't let those bums ever come back, especially after they've done such a crappy job. You know? Jeez. All right, let's keep going here. This is the U.S. dollar for 20 years, so I put a little longer perspective on it. What you can see is that it kind of looks like what happened in 2008, 2009. We've drawn the parallel before with gasoline prices. Now we're doing it with the dollar. Are we seeing another flight to safety? I think so. The tsunami is going to hit here. Don't get me wrong, but it's going to hit Europe about 3 times as hard. 3 times as hard. Be thankful you're not there if you're not there. If you are there, find something else to be thankful for. All right. This is Ethereum right here. Ethereum has had a terrible weekend. It's below 1,300 right now in the evening as we speak. It's down about 15% over the weekend. This is going to pull the market down. And Ethereum, once again, I want to remind you, it's blockchain. Do you know how lame blockchain is? Blockchain probably existed. Cavemen probably knew what blockchain was because they could add and subtract. So I don't know what the whole hoopla is here. Besides, you can't own part of this company. Okay, you're owning something called a token. It's like a ticket to get into a Dodger game. You don't own the Dodgers when you get a ticket to get to a game, right? You own a token. So what? I don't know. Maybe it gives you a bus ride or something. It gets you to a concert. Maybe it gets you into Fleetwood Mac. But I'll tell you this: it's a token, and Bitcoin's a password. A password. Okay. All right. This is Coinbase Global. I'm only doing a couple cryptos here because I've just had it up to here with cryptos. They are the second leading cause of mental illness, right behind cable news, and having to deal with them is really tough. It is an insult to one's intelligence. Plus, I don't know, I forgot. My intelligence is so insulted that I can't remember anything. All right, so Coinbase Global was bought by BlackRock in an attempt, I think, to give crypto legitimacy. Oh, please. They're going to lose their shirts on this. It's also owned by Kathy Wood, knock on wood, in our 11th largest holding, and they're the custodian of grayscale funds. We showed you those before. Those are the ones where, you supposedly own something which gives you exposure to Bitcoin, except you lose all your money while Bitcoin goes up. But they're 401k approved, which is the good news. There's no other good news about them because you lose money constantly. There's no good news when it comes to grayscale. Okay. Blockhead Inc. Okay, now this is a Bitcoin miner. Bitcoin mining is probably one of the dumbest things I've ever heard of. All it does is involves a bunch of electricity, which produces no GDP, and this is a company that does it. Right now, worldwide, I don't know if this is the case for this company right now, but the average cost, because they've driven up electricity so much, and EVs have driven up electricity so much, it costs $35,000 to mine a non-existent Bitcoin. So in other words, a phantom thing that doesn't exist costs you $35,000 to produce and claim it exists and put it behind your password. Okay? Good enough. And Kathy Woods, another one of her big holdings right here. Oh, my God. All right. Now, this is important. Semiconductor index breakdown in this very, very important group. This is another thing that's very bearish, especially in light of Fancy Nancy Pelosi's insider trading and all the stuff she's doing with semiconductors, going and visiting Taiwan and getting more inside information, and then passing a $50 billion bill for this industry. Some people call it corporate welfare. Don't they, Bernie Sanders? Don't they, Elizabeth Warren? I'm surprised you didn't oppose it. All right, Dow Jones REIT index. A personal note, I've sold my residence partly because I saw this. Not entirely, but partly. I'm sorry to say this, but I think the time that real estate is the best hedge against inflation is basically over. Okay, and I'm going to say that for the following reason. It's not that inflation will push up rents and owner occupation costs and equivalencies and all that. That's not the reason. The reason is that demand is going to fall off because we're an aging society. old people sell houses, like me. I'm old. I sold my place. Okay, get it? Young people, the ones that are right now are sitting and smoking weed and playing video games in their parents' basement. Normally, those people are getting married, having kids, buying houses, buying appliances, upwardly mobile, but they're not. They're smoking dope and playing video games in their parents' basement. Okay, big pharma now. Here's something. Here's the reason why the Dow has stayed up so much. Look at this. This is just barely started to come down. And there are 4 or 5 Dow stocks in that are big pharma stocks. Amgen being one, United Healthcare, which is like a Medicare, they're sort of a facilitator of Medicare, and other PPO plans and all that. There is Johnson & Johnson, and I forgot who else is in there, but there's like 4 or 5 of them in there. Oh, Merck. Merck is another one in there. And so you've got a heavy weighting in big pharma. Big pharma itself, when you add companies like Abbott Labs and Biogen, and you add up big companies, Bristol Myers and all those, you've got some major market cap here. This is what will pull the averages down, like the Standard & Poor's. They were as recently only like down 10%. So it's like, are we really in a bear market? Yes, we are, but this is what they do to fool you. Okay? Now, the bank index, this is gonna be hard for the banks right now because of the inverted yield curve. Remember, banks borrow short, lend long. So if it costs you more to borrow than you get back in lending, it's not so hot. As they say in Italy, not that so good. So what we're going to have here, so it looks like banks are breaking down also, and we'll see how they go. But right now, the environment for banks is really, really bad. All right, the broker-dealer index, these guys, make out from IPOs. IPOs, I think, are done. We're not even going to get SpaceX out. So these guys are due for a big fall. But look at how high they are. We've got some major firms like Goldman Sachs, and Dow Component, still holding up pretty well. And here are some other companies, American Express, a credit company, a financial company, still holding up relatively well. And Berkshire Hathaway. Now here's an example of how everyone is taken to slaughter. Warren Buffett's own company, this has had a phenomenal track record for 20 years, but look at this. This has gotten hammered, and it's owned some of the better groups like oil companies. It has not bought crypto. It has bought, I think it was HP. So it's a big stake of Apple. But look where it is now. It's about to break down from a rounded top, and we've got a target for it of $260,000, which is a pretty large drop. And that's what the second phase of a bear market is all about. It takes everybody out with it, and it basically creams everyone, even the cream of the crop. That's when you get good opportunities, though. That's why you want to have cash, because you can't buy this at 260 if you don't have the cash to do it. If you're holding something else and riding the down escalator, well, you're not going to be able to get this. Goldman Sachs, this one is held up very well. This one also looks like a rounded top. I would say this one has a long way to go, but we'll see. Okay, MasterCard also held up pretty well, but we are hearing more and more about people being tapped out on credit. So between MasterCard and Visa, they're just starting to break down, which tells me, and should tell you, that we're not that far into this bear market. These haven't lost a lot of money yet. Stupid stocks have, but not the big boys. These are Dow components. At least Visa is. And they're not losing that much money yet. They're about to. They're right about to join the party, and you're going to start to see some major, major damage to people. That's why I keep saying, stay in cash. If all else fails, stay in cash, stay in cash, stay in cash. All right, United Parcel Service pretty much got the same treatment that FedEx got from the FedEx announcement. Look at that. Big down day on Friday. Global recession. Say it again. Global recession. That's where we are. The volatility index is the last one I'm going to show you today. This one I'm going to explain a little bit. Volatility is a measure of the expected daily change in any asset. So the VIX, which is this particular volatility, measures Standard & Poor's 500 daily change. Okay? The higher the volatility index is, the more the market is fearful and subject to being at a bottom. Okay? So at a market bottom, at a fear bottom, like what happened, you can see in this chart in 2020, it spiked up to 85. That is a huge number. Well, right now we're at 26. That's a low number. Ideally, to have a bottom, and we're going to have to see a lot higher, 50, 60, 70, I don't know. But it's not going to bottom anywhere near 26, and that's what I'm going to tell you right now. But I do want to say this. Thank you so much for tuning in. Catch us on TikTok, Getter, you name it, Facebook, LinkedIn, and other great places. And we're about to have this incredible series coming up, which we want to tell you all about. We're going to tell you more about it coming up. It's not one I'm at all looking forward to doing, but it has to be done. Somebody's got to report it. There's a substantial threat of treason in this country, and we're going to tell you all about it. It is going to be absolutely 100% documented. It will be coming up in the next several weeks. So with that, thank you very much for tuning in. Great new subscribers. We love you all. Leave your comments. Tell me I suck if I do, but I know I don't, because if I was a woman, I'd be all over me. So no, you can't tell me I suck. Well, actually, you can, but I'll just ignore it. Anyway, with that, we'll see you next time.